Tuesday. Welcome back to the final hour. Chris Pulver here, just after 3 p.m. Just got out of a long class, but a great class for my waterfall income service. Had a bunch of new traders, bunch of new information, a lot of follow up on that. I have some notes from today's classes. The recording is being processed right now that'll get posted in your classroom, hopefully in the next few hours. It was just structure wise. It's like crawl, walk, run. There's a lot of information. I know that I've got some new traders, and this is for anybody. I'm just here to teach, right? I'm here to teach. I'm here to trade. I'm here to help people learn. I think there's better ways to trade the market. One of my favorite tools is to trade as options. I think it's the most fair thing you can trade. I say that because you don't have to worry about spikes up, spikes down. You don't have to worry about prices playing stupid things. You have a trade that is outlined over a certain period of time. If it's above a certain level, I can make money. If it's below a certain level, I can make money. If it's above or below a certain level, I can risk defined amounts, right? And there's a pro and a con, or there's a trade-off to everything I do, but all I have to do is know this trade needs to be above here to make money or below here, and there's my risk, and it's all very much easy to trade. So I spend a lot of time educating traders. I think options are a great tool. I'd like everyone to learn. Don't be intimidated by the stupid language and the dumb strategy names. Everything has a reason, okay? So waterfall income was a great class today. Hope everyone enjoyed it. If you're coming in the session, say hi. Let me bring up the chat here. So this is Happy Tuesday. Markets, kind of a interesting day. Ended up taking a very small loss today on daily profit play, which was annoying. We are watching the market just basically puke a little bit all over itself day by day. This is now 1, 2, 3, 4 directional days in a row, which is pretty unusual. All right, and yes, today the market did like directionally have a little pop, and then it found a nice little pocket, which was a bit of a gap here around 5,900. I noted like the 5,900 to 5,850. Also, the SPY would be about the 590 to 585. So the SPY ended up hitting lows today around 589.66, so right in that 590 to 585 window. I don't think that this is done yet. I think the best trend to continue would be a break of this trend line here. Until this happens, I would not be getting aggressively bullish on the market. We are now sliding into a couple weeks in a row. NVIDIA has earnings on Wednesday, so that's going to be the big deal, whether or not prices are going to be saved. I read this today from, this was from Tasty Trades Cherry Picks. This would have been from, let's see here, NVIDIA with earnings. This is crazy. Plus or minus $13, roughly a 10% move. That's exactly what I saw for the average earnings. Historically, overnight gaps in NVIDIA after earnings have averaged a slightly positive move with a standard deviation of about 8%. Implies that historically, we have an up or down move by about 8% with a 68% probability. That's a one standard deviation range. So you go back, we've had overnight gaps on earnings. Some of the big ones like 26% gaps, 13% gaps, so the rest kind of start small and build. But here's the important stuff. Okay, this is staggering how large and how important and how volatile this stock can be. So hear me out. NVIDIA, given its 19% weight in the VanEck Semiconductor ETF, which is SMH. So right here, SMH, NVIDIA all by itself, NVDA is 19% weight of SMH. This instrument is essentially a make or break. Okay. In fact, I saw this and I closed out profit on this trade right here. I pulled in $1.13 on a 111. So I bought a put, sold a put, sold a put. I did a 111 trade, pulled in $1.13. I closed it today for 45 cents. I'm taking the profit. I'm moving on. I don't want to deal with any of this drama. If this thing drops hard and NVIDIA somehow, and it probably won't, in all honesty, I think NVIDIA will be fine. And all of a sudden SMH just starts to rip higher and the AI trade is saved all over again. Maybe. But just in case it doesn't do that, I'm not taking the risk on this trade being potentially a assignment of a $200 stock, even though I'd own it at, this would be $5 minus, so that'd be a $500 profit trap minus the $200 and the credit. So I've got about 193.87. So I could own these shares at 193.87. Now that's not a bad position, but I also have no idea if this thing like starts just unwinding relentlessly and 193 is a 31% discount. I don't know how bad it gets. In fact, I would say this. this 5-period yearly pivot might actually be a better position to start building from. So I'm just going to take the profit on that 111, and I'm going to look to see, does this come down to 180, 170? And if so, then I'll get more bullish on SMH. But that would be after like a 30+% correction. So, but this is crazy. I'm not done with these stacks. This is pretty nuts. 19% of SMH is all NVIDIA. NVIDIA's earnings can create outsized volatility in the semiconductor sector. A big beat, so positive earnings, could help this stock a ton, and a big miss could pull the entire ETF down a lot. Also, it's not just SMH, which is a huge market cap weighting here, but also the 7% of the SPY, okay? NVIDIA with a $3 trillion market cap is 7% of the SPY market cap, and it's 8% of the QQQ market cap. So NVIDIA earnings can literally be a broad market mover this week. And so will NVIDIA be up or down? Because if it is up or down, guess what that's likely going to do to the markets? NVIDIA going up is probably bringing the indexes up. NVIDIA going down is probably bringing everything with it. So it is a crucial earnings report that could be a make or break for the market. Okay. And when I say break, I mean temporarily, probably short term, but it's going to be painful if we have a nasty spill on NVIDIA to the downside. Earnings trends wise, their revenue has been growing, their EPS has been growing. They do have another pretty robust forecast. So they're looking at previous estimated revenue is 33 billion, and they're looking at 38.1 billion. So it's still like steady revenue growth. I know there was the big news on DeepSeek that hurt them really badly, but they came back and filled the gap. Now it's back in between. There's just a lot of indecision right now. I think my biggest concern, technically speaking, would be this: if NVIDIA rolls through this trend line, I would say it could be a painful next like 30 to 60 days. If this thing breaks lower, you better hope that thing wants to rip back and find a gap. If this thing gaps higher, everyone could breathe a nice sigh of relief. The market's probably going to go higher. Maybe renew the optimism in semiconductors, renew the optimism in AI, renew the optimism in momentum and growth. Maybe have a big, ridiculous green heat map where everything's green for the day. I think it's silly that we've got to think about one stock meaning that much, but it's probably true. Am I going to straddle the earnings? No. I'm not, because I calculated about a $13 move. And even if I did a trade that I like to trade, like one of my services newsbreakers, I priced it out this morning. I was on this customer service call, and it was going to cost me like $12.60 for what I can probabilistically calculate as like a $13 move. That's a terrible trade. So I think NVIDIA is so priced with a high premium that I'm not going to do anything with it. At the same time, I'm not going to sell premium, even though it seems like that would be the logical answer, is just sell a ridiculous amount of premium, right? But if I get, let's say I get 10 cents on the dollar here, does that get me excited about NVIDIA? Like, not even close, right? So here's an example. Are we going back above 155 or 160? I don't know. Let's find out. NVIDIA trading at a 63.2 IV rank. Let's go out to Friday. Are we getting back above 155? Well, could I do a broken wing butterfly at the all-time highs? Maybe like pin it at a 160. Is it possible? And I have no idea. This trade could be a terrible idea. But if we're averaging about a plus or minus $8 or plus or minus $12, $13, this thing would have to go $31, like a 3 standard deviation move, for me to have any trouble in the trade. But here's what I'd have to consider. If I wanted to do let's go butterfly call spread, and I'll pin this thing at 160. I have no idea if this trade is going to look good, but I'm going to try to price it out. So if I pin it at 160, I mean, it's just a horrible trade. So if I do a 160 that's a terrible trade. I pin it for a broken wing butterfly. Whatever. I'm not going to take the trade. If I would say this, if I could get this trade for like 50 cents, I might take the trade. But for me to go 50 cents, I got to take on $2,000 in risk. That's stupid. If I went out to 190, I mean, this is insane, right? I'm going out to a maximum of $40 of risk, which is $4,000, and the most I can make is like $256 or $260. No, thank you. So, and it's way out of the money. The probability of that trade it's like a 2 delta, so it's unlikely to hit. But point is, I don't like anything around it. I think it's too much on the line. I'm really just going to kind of wait and see. reactionarily, whatever word that is, like my thoughts after Nvidia earnings. So Thursday morning would be, what do I do now, right? So here's an example. Nvidia earnings. We'll just say this: a ton is riding on earnings. Okay, by far the most important earnings event of 2025. Now, why is that? Because we're looking at about a 10% average move through earnings. Okay, we're looking at a 19% weight on SMH. We're looking at a 7% weight on SPY. We're looking at an 8% weight on QQQ. That right there is a monster event. This single-handedly has the ability to move the market probably 1 or 2% all by itself. The crappy part is a lot of this is going to be pre-market or post-market, and we're probably going to have a big gap on Thursday morning. For better or for worse, we're probably going to have a gap on Thursday morning, and that's not easy to trade. So how am I positioned for it? Well, I still have positioning on the downside. So trades like this, for example, I am hedged on ES. So if we are heading lower, okay, if we are heading lower into this moving average, that is a hedge that I will take off for profit. I am hedged on MES. And if this goes to the downside, I am taking that off for profit. If we go up, then I'm going to eat the hedge for maybe a 0.25% risk, and I will watch my entire portfolio probably rip by 30, 40, 50 grand in the day. Like there's that much riding on it. Like I'm expecting to have like maybe a 1 to 3% swing in my account, which is a lot. It's not because I'm so heavily involved in Nvidia. No, it's because the broader market is basically going to make a giant decision after Nvidia earnings. So I'm going to be watching closely to figure out what I need to do afterwards. Because if this is going to happen, if this is happening, or not, well, I guess futures could be up, but if Nvidia is up, okay, if Nvidia jumps aggressively higher, let's say we gap up here, okay, we gap up here by about $10. We're probably going to see some big fat gaps on the SPY and the Qs. We'll see the indexes trading higher. We'll probably see the futures market rip on it as well. Is Nvidia able to renew some optimism? All this was a test of the 200 moving average, and then off we go to the highs again. The nice thing about this trade is if we go higher, what do I have? Ratio spread, cash secured puts, credit spreads, debit spreads, all below this level. I get paid income-wise on Nvidia, and I get a nice broad market lift in my portfolio. Hey, that's great. Cool, I'll take it. All right. If I get this to the downside, then I'm looking at hedges on MES and ES. I'm looking at possibly just waiting for better levels to get hit and then starting to look to deploy some capital with the cash that I've left, which is a lot. I've got like 35% of my portfolio in cash right now, so I've still got plenty of capital to deploy. I just want to see what this does. So, today was a red day, down about just less than 1%, which is fine. It sucks. I'm still down. But I'm up on the year. I've got some buffer, and we'll figure it out. So it's going to happen whether you like it or not. It's coming out Wednesday after market. It's all about Nvidia. That's pretty much it. Like nothing else matters this week except for Nvidia. Daily profit play. We've been super frustrated. This is a stupid week where everything's like silly directional and it's driving me crazy. And even today, I ended up taking a very small loss, which is fine. Manageable, but it came back into profit literally within about 5 or 10 minutes. We closed out the trade. And I'm just like, you piece of shit. So it closed out for a small loss. But directionally, we've had some really dumb price action Thursday and Friday and Monday and today, 4 days in a row. That is very unusual, but it is what it is. So I'll keep trading through it. I'll keep grinding through it. All signs are going to point to what does Nvidia do and how's the market going to react to it. All right. So just put this in perspective. Let me take a screenshot here. I think this is important. Okay. And then SPX. I mean, look, today's an interesting candle, right? We came down to the 100 moving average. We're pushing up a little bit. Again, this could fade harder. We still have a very high bar count. So the 144 to 200 moving averages, I could still see price flushing down. It's going to feel weird to have 1, 2, 3, 4, 5, 6, like just consecutive candles. But the first thing I'm going to look for would be a oversold condition. Do we get any disagreement with momentum? Let's take a look at one other workspace that I have here. Let's go to this guy. Harmonics and pivots. Where's it at? Right there. We take a look at this on the indexes. So Qs are down. We're not oversold at all, right? So this is a daily time frame. We're nowhere close to being oversold. This is my RSI. This is my momentum oscillator. We're not oversold, not even close. So what would be my buying indicator? Well, if we came down here aggressively, I like this level. Are we getting stretched to oversold conditions? If so, I would scoop that dip up in a heartbeat. A lot of these dips have never actually got to oversold conditions, right? Have we gotten to overbought conditions? Absolutely. Have we gotten to oversold conditions? Rarely, right? Look at this. When's the last time that a simple like 70-30 RSI got to oversold conditions? You're talking 2022. Okay, and where was that? After that very first giant flush to the downside. And was it a buying opportunity? Yeah, it was a really nice buying opportunity. This thing went up $30 in like 2 weeks. But other than that, I mean, I'm not saying I got to wait for this to get down to oversold, but I'm saying I will be looking at this thing getting back down to like 40. 40 on the RSI is like a pretty attractive buy zone. It's proven to be a good little dip indicator. Okay, so that's QQQ. It just means that I think there's more room to the downside. We've also had one of the longest. This is the second longest streak in history of closing above the 200 moving average. It's like 470 bars. It is a lot. Would you like NVIDIA enough to sell puts ratio spread with a chance? I already have it. I already did it. 115 by 110. I sold a bunch of puts at 75. I already have exposure on NVIDIA. So I have exposure on NVIDIA, whether I like it or not. So I'm not neutral, right? But NVIDIA is here. I also closed out a nice little win on Intel today. That's actually one I got to update. Let me go Intel. Let me find it here. Intel 1940 buying some shares. Okay, I'm going to jump to this trade real quick. This is a update. Intel buy shares, or I bought shares at 19.40, closing at 23.35 for they'd be just shy $2.95, or actually $3.95 a share. $3.95 per share. And also Intel a three buy call by 23 sell call for about what did I get out of that trade for? I closed out for $18. I paid like 11 and change. So 11. Let me check something real quick. Intel 1626 break even. Okay, got it. Okay, so that was up. 1626 debit closed out for $18. 16 debit closing for $18. Credit for $1.76 per contract. Okay, taking the win on Intel. NVIDIA, here's the exposure that I have. So Netflix, some ratio spreads all looking pretty good for March. Nike, naked puts looking good. NVIDIA, here we go. I have some shares. Okay, right now I have it covered. So I have a ratio spread 115 by 110. I have naked puts at 70 and 75. I've got ratio spreads at the 75 by 55 and 75 by 45. I have shares of it covered at 135 with a put at 115, puts at 110. So I can simplify this by, here's just my NVIDIA exposure. So let's go here. Own the shares, covered, and there's my put protection. Okay, I did the 110 by 100 ratio spread. I will take on some more shares if needed. But otherwise, this is a bunch of income right here. So this is hopefully just income that never has any risk of assignment. And then I have a 100 shares that if we're greater than 135, I'm making some good profit on that. If we're back below that, I've got put protection out to April, so I can manipulate the collar trade where my 115 will generate some profit. It's already up $90, but hopefully more if needed. And then I might take on some more shares of Nvidia, maybe. Hopefully, I don't have to. So we'll see. I mean, it's like I said, it's silly how important it actually is, but it is important. It's going to matter. Yep. So we'll see. Let me go SPY for a second. Let's look at overbought, oversold here. Again, RSI is right in the middle. I don't see any major inclination, but again, how many times have we hit oversold conditions on the SPY? Last time we did it here was a dip in August. We still didn't get down to 30. We got to about 36. Back here, the dip in April. Down here about, so 40. I mean, realistically, it's like 70 and 40 would be kind of a better reading for like what's oversold or where the indicator is. And that might be because there's just tons of bots that are like, you know what, we're going to buy everything below 30. So it's like, well, how about you never get there, right? So if you get less than 40 on this RSI, that's a good opportunity to buy just basic index, you know. But there's nowhere near like extremes. We don't have extremes right now. This market has kind of fallen into like a really choppy, noisy, directionless environment. And there's catalysts, and they're trying to drive all over the place, but it's tricky right now. It's tricky. It's a lot of chop. But I think that's why I said last year it's like going into 2025 expected to be a trader's market. I hope it is a trader's market because I know how to do that. Everyone that's directional is probably struggling a lot. But anyway, that's it. Okay. Yeah. I mean, it's set up for it's set up to I think have better, like at least positive earnings growth. Whether or not the market loves it remains to be seen. This is one thing on Nvidia from a price standpoint, just on fair market value. I mean, I know Nvidia has been trading at a high multiple for a while. We're trading at a 50 multiple, 51 times price to earnings. Current price is 130, fair value is 100. Obviously, people are willing to pay a lot more for what they think is a darling stock. This also gives me a reason to think, well, if we do get down to $100 or even overshoot that, then I think there is a bargain to be had on Nvidia. All right. So we'll see. I mean, it's still trading right there around 130. So we'll find out. We'll find out after market on Wednesday, but it's probably going to move the whole market. Expect some gaps higher, lower on Thursday, and expect the entire market to have some type of reaction to it, positive or negative. We'll find out. I think technically speaking, this is a cleaner trade to get a dip and just flush it out and just get the dip that we're after technically. I think the longer this goes, the harder this market gets. The longer this goes, I mean, two things, right? One is if we flush down, there's going to be a lot of buying opportunities here because that's another thing. Like think about the scare. Think about the scare the market can give investors if it like gaps lower and then flushes down. Everyone's going to be freaking the heck out. But more than likely, this market's going to find a dip and then fill a gap, and we're right back where we started. And all it is a little bit of time, But that gives the market a technical reason to drop, and then a buying opportunity that everyone's been waiting for the last 6 months essentially. Like, give me a pullback. This is the last pullback that we had. That's 5-6 months ago. So if we do have a nasty spill to the downside, I'm still looking at it as a buying opportunity. I'm just going to be careful and cautious on how much I allocate. I think I'm still going to take a couple of nibbles here just in case this thing gets worse for wear. But between this 200 moving average and this outer trend line structure, I'd say between like 5,700 and 5,500, that's my buy window in the S&P on SPX. So SPY, you can call that 570 to 550 if you're looking at SPY. Okay. All right. So it means a lot. One thing I'm also looking at, I mentioned this week, equal weight. Equal weight. If we start, and this is another thing, NVIDIA could probably save the day too. Even though NVIDIA is not 8% of the equal weighted S&P, it will still have an impact on. NVIDIA could also let loose the broad market buying power. Everything in Mag 7 has been over concentrated and probably, hyped up. And now everything's like Apple's no longer value stock, right? Everything's been beat up pretty badly. Amazon's down, Meta's turned pretty hard, Netflix has turned pretty hard, Tesla's turned really hard. So, equal weight might be the other thing that if Nvidia pushes higher, a lot of money might be flowing back into equal weight, which also helps reduce a lot of volatility in the portfolio. Over longer stretches, you actually have equal weighted perform equally as well, and even outperform market cap weighted. But there are stretches where it gets beat up, where it just underperforms so badly. So that's the hard part. Is there's always a trade off, you know. So this is another one to watch for Thursday. Is like, are we pushing higher on RSP? That could be rotation into the broader market. Are we pushing down on RSP? That could be just bad things, right? Like SPY down, RSP probably down, Q's down, QQQE could be down. I mean, look at this thing turn. Poke the fresh highs on QQE and we're dropping all the way back. I still think this is pretty well supported. Can we have another dip here at the 200 moving average? Maybe. Right? So I have some exposure. I bought this thing at $90 and it's up to 97. Now it's faded a little bit. I'm just going to wait it out. Dow, I'm going to wait. I think Dow also has a really good bar count. I'm going to wait. Does it go down here? If it does, I'm looking to buy that dip. So corrections, putting in some dip territory, put in some option trades. I like the Dow quite a bit. Also, the Dow is a little bit less volatile because it is a price-weighted index and not a market cap-weighted index. So, I think if I'm looking at index opportunities, I like RSP, I like QQQE, I like Dow, and maybe. Well, I do like this SCHD and SCHG, but maybe even the dividends over growth right now. Those are good ways to diversify without getting tied into like this market cap weighted concentration. So a couple of instruments I'll be watching for some add-on trades. All right. What else? VIX is up, but this is also an important spot for the VIX. Having the VIX go from like 15 to 22 is not really a big deal. It feels like it. Having 3 days in a row that are selling off. Today is not a sell-off day. It was a sell-off day, and then it pulled back pretty much the entire amount. So we pulled back about 70-80% of the move. But VIX is still like fairly contained. Does the VIX get worse? Well, a move from like 25 to 45 would feel like trash. But if anybody's been in these markets and you get the VIX greater than 30 or greater than greater than 40, a premium selling strategy works very, very well. So if we have a big spike in volatility, I'm probably adding some longs in SVXY. I'm probably selling some premium all over the place, and I might just do out of the money cash secured puts on stocks I like. They might not ever get assigned, but it's income that I can generate over like a 30 to 60 day window. Dollar index pushing down a little bit lower. I'm totally good with that. I don't know if the dollar is going to catch a bid in here. I thought the 106 to 105.50 zone could bounce. Maybe it does, maybe it doesn't. I wouldn't be offended if the dollar just drops more. I wouldn't be offended if U.S. 10-year yields drop more. Oil, a lot of volatility on oil. It finally did get a little shakeout here. I'm glad I'm out of my iron condor. I took an iron condor trade when this was all starting to chop around in the middle. So I bear call spread here, bull put spread here, iron condor, 20 cents, closed out for 10, took about half the profit. That's fine. And now I'm just long on natural gas, gold, long candle to the downside, still hasn't made any real pullbacks. We can go into overbought, oversold conditions on gold. Probably dealing with some technical overbought conditions. Okay, daily time frame, I can see it. There is divergence here. I could see the bears at least either profit taking is happening or the bears can take over a little bit in the near term. Gold, I think, offers up a pretty important buying opportunity if we get it. I'm going to be patient. I like this previous test, and I also like all of this dynamic support. I'd love to see gold offer up a respectable bounce. So I'd like to see it sell off a little bit. Know what that looks like though. Like, what does gold have to do? Why would gold be selling off a ton? Maybe more risk appetite in the markets. Maybe more risk appetite can kind of soothe the concern that's out there and all this trepidation that the market can't go any higher. But anyway, technically, I'd like to see gold get a dip. Silver pulling back a little bit, but still nicely supported around the 200 moving average, $29 and $26 there. I'm still long on SLV. Bitcoin right off the 200 moving average. I did add some exposure on Bitcoin today. I ended up protecting a collar trade for a little bit of profit, added another one in. So I'm going to keep an eye on this one. I sold at 60. I did IBIT. I sold a $62 covered call. My break-even price is, let me see what I put it out there for. So it was IBIT. IBIT shares, that was out to March. Okay, and then I added in, I think it went to May, sell the 62. So I went to May and did, it was 21 cents. So closed collar for 21 cents credit, which brings me down to 34.89, and then sell the May 16th. Is it 16th? I think it's May 16th. May 16th expiration, 62 covered call for $1.50 credit. Gives me a break even now of 34.39. All right, so my break even on IBIT is 34, which means I've got a nice little buffer of about 30% from current price. If we get back to recent all-time highs, I get it called away at 62, which would be a 23% rally. You know, maybe I get it in the way, maybe I can roll it. I will do my best. Hopefully it's not something I've got to shortchange my upside on. MicroStrategy. I did end up closing out my collar trade. I closed the put set out for profit. I put in another one, and I'm just going to let my 310 call sit. So this one for MicroStrategy. So I have my shares. I have the 310 call. I closed out my 240 put. I do have some credit spreads in here as well. I have this. This is part of the collar trade now, the 310 by 200. So I do have some protection there if I need it. Otherwise, I lowered my cost basis by a few bucks. So I think I lowered it by, let me check it today. MSTR 263.72. Okay, so that's my new break even. The nice part here is if I get it called away, 263.72 minus 310. So I'd be up around $14,000 in MicroStrategy if the trade just works out as I have it. My break even's pretty tight. I can also sell a bunch of premium, work the cost basis down. Technically speaking, I'm looking at this to go high, low, lower, high, lower, low. We hit that symmetry today. Could it go lower? Yep, we have previous resistance here that could be future support. Yeah, so I mean this 240 to 200 level, if MicroStrategy bounces, or even if Bitcoin bounces, that's essentially the same thing. If Bitcoin goes up, MicroStrategy is probably going up with it. Right? So we'll see what it does. But a move back into fill this like $300 zone wouldn't be terrible. Japanese yen pushing up into my levels here. So I got in for 0.000055. Let me see what my profit target is here. So individually, right now this is up. So my max profit's around $1,200. I'm up $440. So I'm about a third of the way to my profit that I want to be. If we get more upside here, I think that's okay. Question really is, do I love this futures trade that much? I mean, I look at this as a hedge. I think it's better for me to be holding FXY because there's no like duration risk. But I obviously make a lot more money in futures. So do I like this trade enough? Is it liquid enough to get out for 444? Let's find out. So we've got a nice little run here. Close 0.000091. So this would be closing out for about $1,100. The debit itself was like 687. Let me make sure I do the math on this. So 1133.66. minus 687. Okay. If I can close it out there, that's not bad. It's not bad. Let me see if I can close it. I'll take the profit if I can. Okay, let's go one increment lower. So $1,100 minus 687. I just got filled. All right, 0.90. Got it. All right, so let me check on futures here. I think I'm gonna close these out for a little win. 0.0090. Closing this out. Come on. Filled. Good. All right, so I'm getting filled here. I'm going to take the profit on 6J. So that is /6J. Nice little $450 winner. Filled. Excelente. Got it. Okay, that's good. I'm getting filled where I want to get filled. That's fine. Taking about $440 a profit. Okay, almost there. Close. Good. Come on. Don't be greedy. There we go. Filled there. Good. And might have just a couple more. Got it. Okay. All right, so that was a winner on 6J. All right, so this one is done. So closed for 0.00009. $450 profit. All right, closing that out. And that way I'm not worried about if it goes higher. Yes, I'm sacrificing some profit, but if it pulls back, I mean, I only have until September. That was my one concern about this trade is I can't just go out with like indefinite long Japanese yen exposure. And so that's why I opted for this. I still have a little run on FXY. So if the Japanese yen gets crazy bullish all of a sudden and this goes up, then I have this stock at about $59, close it out for maybe $6 or $7 a share, and I can add that to my overall hedge. So the idea was I was up about like $5,000 or $6,000 on Japanese yen, and I'm closing out the profits on the future side. I'm going to see if the FXY is still a reason I can let this thing run. And if it is, yippee skippy. All right, what else? DAX, FTSE, Argentina, a lot of range bound trading here. China is hanging in there. MAGs, this would be a big one to watch. This actually isn't a terrible trade. I would say that MAGs are a pretty rough spot to be getting long this year. If MAGs comes down to this 200 moving average, not saying I don't want to say no to it, but man, I don't know. I almost think that this would be the sign of the rotation where, we need 493 other stocks to do better. So if this goes down, I don't know if there's going to be a huge bounce on Mag 7, or if this is something where just individually they all kind of get their crap, the crap beat out of them for 6 to 12 months, and then they start to look like, hey, you know what? Those stocks are still really good quality. They have a ton of cash. Nobody compete with them, and the market loves them again. But I think this rotation out of them is pretty clear. So I'm saying that because like this is dirt cheap. If I just bought Mags, I mean it's a pretty good bargain when it's like, yeah, I can buy it for $50 a share. But my concern is that this stock that has never gone down since this ETF was created, I don't want to see mags be down, 50% or even more and be like, well, now what do we do? So I'm not that excited about buying the pullback. I would just try to rotate into other stuff. Apple, back above earnings highs, is actually doing okay. Amazon, nice little bounce today, in fact. Nice little bounce on Amazon. Google, down to the 200 moving average. I've got a bunch of dollar cost average and income trades in here. Meta, getting a broken wing butterfly for this week that expires on Friday. Microsoft, a little allocation at 416 and some ratio spreads down here. This one is profitable. So that was a winner from last week. AMD at 1.4. Okay. So this was profitable. So I'll say expired, full profit. And then March and March again, some income trades on Microsoft. Netflix, I closed out this broken wing butterfly. That was a good one. I don't mind this stock if I'm going to get some dollar cost averaging. I've got a ratio spread down here, or 111, and also looking to buy the the proper dips in the moving averages. Nvidia, all eyes Nvidia for this week. Tesla, not great. Tesla is looking pretty crappy right now. I think it's an easy stock to buy when you get confirmation to buy it. Right now, that could be the right side of the trend line. Just wait. I do have some tests and tests. I've got some ratio spreads I'll be watching. If I take any assignment, I'm going to be repairing that stock and trying to make it as simple as possible. Berkshire Hathaway, this one's looking good for a profit. Bonds, we're trading at 91.44. My TLT position is looking pretty tasty right now. So TLT, I'm dynamite, up $9,700. I still have time in the trade. April 30th is my sell side at 92. I might end up looking to close this thing. So if I take a 65 by 92, that maxes out about $27. Okay. If I close this right now, it's trading for $24.50. So I'm close to max profit on this thing. And I'm okay if it is max profit. If I wait to $27, then I close it at 27. My debit in the trade is 21. So if I close it at max 27 and 21.17, that's 23.32 per account, and I've got about 11 accounts in this trade, so it's a good chunk of profit. I've got some more profit to roll into. So I think I'm going to let it try to get greater than 92. I hope I don't regret that, but there's still plenty of time in the trade to see this thing respond the way I want it to. Fed funds rate, doing some good work. I'm actually pretty happy that it's down to 4.3. We'll see if that reflects in any updates in mortgages, because 6.85 would hopefully be able to drop about 20 to 30 basis points. That might put a little smile on my face. Junk bonds still showing credit spreads are very, very tight. So there's plenty of liquidity in the market right now. That is a good thing. Like even this little 3 to 4 day slide, this is not breaking down. So these high yield treasury spreads like AAA, BBB, CCC, the more you see this thing staying consistent and tight and going higher, it's probably a good sign. So we're not getting like this loose illiquid market. China, like I said, back up towards these highs in September. Pullback on CQQQ, Alibaba, just a crazy run here. I did close out these shares for profit, 85 and 99 to close out for 126. Baidu still hanging around the $90 handle. I'll watch this one. FXI, KWeb staying out of JD at $40. I get it called away this week. Hopefully, I'm going to write that down. JD might get called away for profit. My break even is around $36 or something like that. Let me check my JD. 35.92. 35.92, get called away at 39, $3.08, making 46.20. If it stays above 39 this week, I could roll it, but I've got to take in earnings next week, which I don't really want to do. I think I'd just rather get the buying power back. If I get it's called away at 39, I'm getting buying power back of around 60 grand. So I think that's fair. Schwab dividend, Schwab growth. Wow, that's a big difference. This is why I am in at this 200 moving average on Schwab dividend. I just think this is going to be a little bit less exciting, a little bit less volatile, and I'm all about it. Growth, this is fine as long as we are looking at maybe buying the dip here. But honestly, this rotation might be easier to go Schwab dividend, SEHD instead of SEHG. I like dividends better. I mean, not like in the right market. A bull market is great for growth, but if this market is going to be looking to deleverage or get out of growth for a second or rotate out of whatever is volatile, man, growth could be like look out below, and who knows? But I'll take my dividends and my boring stuff all day. All right, I think I will wrap it up there. Tomorrow, schedule-wise, tomorrow, I will be posting a video for this final hour. So I'll premiere it on my YouTube channel, youtube.com/Chris Pulver, youtube.com/Financial Wars. I'll post a video premiere. Reason why is I'm going to be at the doctor in the afternoon. So should be good from that point. Tomorrow afternoon, aftermarket is NVIDIA. Okay, there's your big bad NVIDIA aftermarket Wednesday. Expect some gaps, expect some crazy stuff. Tomorrow's going to be the calm before the storm. Anybody in my daily profit play, it'd be nice to see a calm because we haven't had it yet. This market has not been calm. We've seen really quick direction in these zero DTs, and it's been a little annoying. But it is what it is. So reality is took a loss here, small loss here, hedged my way through a win last week, which was fine. Took a loss yesterday, took a small loss today, and I'm a little annoyed, but unscathed, really. It's like I lost a few $100. Big freaking deal. We'll trade through it. All right. Any questions? All good? I'll let you go for today. Lori, thanks for being here. Oliver, thanks for being here. Christian, nice to see you. Mahaba, nice to see you. Overbought. Yeah. So you're in DAX and FTSE. I got it. Yeah, that's good, man. Let's see here. Nice, Christian. Good, good, good. That's a good win. Okay, straddle on. Yeah, I mean, NVIDIA stuff, I'm just saying, I think it's better to be a spectator in NVIDIA than it is to put money down and possibly have it get blown up. So I just think it's going to be a big event. The market's going to be really reactive because of it. And I'd rather be on the side of reaction and not have to sit here and anticipate and then get caught on the wrong side. Right? So I'd rather be ready to pounce as opposed to, oh my gosh, I've got to now backpedal and figure out how to get out of trouble. Okay, Pamela, look at that. DPP 4 for 4. Freaking awesome. That's awesome. Is DAX overbought? I mean, it was crazy overbought. DAX here. Hella overbought. Yeah, very much so. So this is not only is it overbought, but we have divergence, and it's overbought. So yes, how much so? We'll just pull back into some of these demand zones. I just think it needs a pullback. A pullback is fine. Like this market doesn't have to freaking crash. I mean, look at how far away this is from the moving averages. If all it did from a 14% stretch away move is come back and find some dynamic support, then buy the dip. I don't mind buying the dip. It's just like, give me something to buy. I just can't buy like overextended moves that have been this far above and this long in the tooth. I'm just not going to buy it. So, all right, Pamela, that's awesome. Congrats. That's a great trade through the day. 4 for 4 is awesome. You freaking killed it. Definitely not an easy day to do it. That is for sure. Okay, and then I had a chart alarm on AMD, which is down. All right, that was a post-earnings play. Get rid of that one. Okay, that was it. I think that'll do it for today. What is your... Yeah, I closed it already. At Netflix, I closed it out for like 10 cents or less. Yep, so I posted that. I posted it in my Discord where I took the trade. And I took it was $1.15 credit. I closed out for a 10-cent debit. So I pulled in like $1.05 net. And I'm just walking away without having the risk. I'm still going to leave this trade on for Meta. Meta, as long as we stay below 750, I make some income on this one by Friday, and also on Costco, which is making an interesting run here. But I have a profit trap here. This is a butterfly. This is a broken wing butterfly with a pin. Costco would have to get up to $1,100. I'm not saying that it can't happen, but it's unlikely. And I want to double check the option train here. So Costco by Friday. I was going to say, do I have earnings? No, earnings is next week. Oof. Okay, so earnings next week on Costco. I could have swore they had earnings, but they didn't. So earnings next week. Anyway, this trade pre-earnings is right now trading for a 5 delta. So there's no issue on my broken wing butterfly. It's set up like this. I pulled in about $1.10, and I have a trap like that. Actually, it's a little bit different. I have the $1.10 and then a trap like that. So this is my $1.10. This is my $6.10 profit trap, and there's my risk of around 20 minus 6 would be about $1,300. So my risk down here is $1,300. Make 100, make 600, and give it some wiggle room at a, right now it's a 6 delta. So probability of getting this thing at the money is pretty slim, especially pre-earnings. Anything can happen, obviously, but man, I'd love to see price getting up into my profit trap by Friday if that's possible. We'll see. So, all right, I'll let you guys go. Thanks. Good trading, Pamela. That's awesome. Great trading today. A key, you good on that one for Netflix? I close out Netflix for a winner. That was the broke wing butterfly. I would have stayed in the trade if the top was a little bit better priced. So when I took the trade originally, I had like a 1030 by 1040, and the fact that price went up here to 1063, that no longer looks like a safe top for me. So if I was in the trade at like 1060, 1070, I'd keep the trade on. But because I had the top at 1040, that was my pin price. I don't want to mess around with that volatility, so I just closed it out. So $1.15, I closed it out for a 10-cent debit, which means I walked away with $1.05. And I'm just taking the trade, no risk on it. It's done, it's over, all good. Okie dokie. All right, thanks everybody. Have a good rest of the day. See you soon. Thanks, bye. That Discord post would have been in free group chat. Let me see. I'm looking for it. Maybe it was in options. I posted it somewhere. Let me see if I can just find it. Yep, I posted it on, it's right here. So here's my Discord on 2/21. I posted it for everybody. That would have been last week on Friday, I believe. No, when's the 21st? Last week Friday, right? I think. Anyway, there it is. Broken wing butterfly entry 101, closing 10 cent. It was like a 90-cent winner. Okay. Yeah, I posted that trade right there. That was posted in the free group chat and tagged everybody. Yeah, there's a lot going on. So, but now you know. It's probably trading for, let me see what it's trading for here. Netflix. I can't see it anymore. Fudge. Well, I was thinking maybe it's trading for a little bit less. It probably is. It's probably trading for like 1 cent, 5 cent. You could probably take most of the profit on that broken wing butterfly credit side. Okay. Cool. All right. That's the trade. All right. Thanks, everybody. Have a good day. See you soon. Bye.